the outlook for Ecora this year and beyond remains very, very exciting. We've spoken about Ecora's very layered growth profile, so I won't repeat that, but we're excited to see that materialize and with potential for a number of key milestones and de-risking events in that regard over the year.
Hello, you're watching Proactive. I'm joined by Marc Bishop Lafleche, the CEO of Ecora Royalties. Marc, very good to speak with you again. The base metals portfolio performance has been very strong in the first quarter relative to last year. What's driving that, and is it sustainable for the full year?
Yeah, it was a very strong quarter to start the year, and that's really a continuation of the strong volume growth that we've seen over the course of 2025 carrying into 2026. Primarily our base metals royalties, where we saw 152% uplift on Q1 2025, primarily volume growth with some pricing tailwinds as well. But we've also benefited elsewhere in our portfolio from quarter-on-quarter growth from our uranium exposure at the 4 Mile uranium royalty. And in terms of your second part of the question, I think we're very much on track for over the course of 2026 to deliver year-on-year volume growth, in particular Voisey's Bay and Mimbula.
Last time we spoke, you outlined a number of catalysts that were expected to occur in 2026. Can you remind us of those, and are they still on track?
Yeah, that's right. We absolutely have a number of potential catalysts in the year ahead. It should be a very busy year in that regard. And one of the things that we're quite excited about is the very layered nature of these growth catalysts, and spanning, for example, on the first layer, assets that are already in production, simply ramping up towards full production capacity, demonstrating the cash generation potential that these royalties have in and of themselves, I think is a catalyst for Ecora. The next layer being potential for growth from brownfield expansions or restart of mining operations. And in this category, key to look out for the Mantos Blancos Phase 2 potential expansion study expected to be released later this year, along with further developments at the nifty brownfield restart. The third dimension relates to greenfield projects moving towards FID and ultimately first production. In this category, potential final investment decision or FID at Santo Domingo, the Phalaborwa rare earths project, definitive feasibility study is expected in relation to this project later this year, and thereafter further ability on first production, I think would be very well received. And then the last layer in our portfolio relates to assets that are not imminently in production in the short or medium term, but are seeing some really positive, or potentially have the potential for some very positive and meaningful de-risking events as these assets move up the development curve. An asset like NexGen's Patterson, or a royalty for Ecora, a royalty like NexGen's over NexGen's Patterson Corridor East is a great example where continued drilling has not disappointed and continues to deliver what are, frankly, difficult to describe as anything other than geologically spectacular results.
Marc, can you talk us through the timing delays at Voisey's Bay?
Yeah, so Voisey's is a stream that settled with the delivery of physical material. And so from first production at the Voisey's Bay mine, shipment to the Long Harbour refinery, and there we have shipment from physical material to Europe where we receive it. And so on a quarter-to-quarter basis, there can be some sort of dislocation between what's actually produced and when we receive this material. In the past, we've seen some units potentially go from April into March or March into April, and those units then therefore straddle reporting dates. And this is a good example of some volumes slipping on a quarterly basis. When you look at what we've received by the end of April and what we've expected to receive in May, based on what's already on its way to us at sea, I think we're very excited about the year-on-year growth that we should see at Voisey's Bay. And of course, while the exact timing of cobalt deliveries can impact quarter to quarter, there's been certain no change in terms of the volumes we expect on a half year or full year 26 basis.
The conflict in Iran has led to some concern in the markets over the price and demand for some commodities, copper, for example. How do you see it?
Yeah, well, you're absolutely correct that the conflict has introduced potential uncertainty with regards to short-term industrial demand, which of course has had an impact on commodity prices and volatility. We've seen, for example, copper pull back slightly before rebounding to levels that currently anyways, are actually not too far away from all-time historical highs. On copper, the short-term supply-demand balance remains fairly tight actually, which partially probably explains why copper prices have been resilient. And as you look further out, medium and longer term fundamentals remain very robust. But I think other commodities have seen price improvements or even fundamental improvements as a result of the conflict, in part because of a shortage of sulfur, which is a chemical used in the recovery of certain minerals, for example, uranium, in connection with as an alternative energy source. So all in all, I think the portfolio and commodity prices has been quite resilient thus far.
Marc, for those viewers less familiar with the royalty model, can you remind us of the benefits of investing in Ecora as opposed to investing directly into mining companies?
Well, first and foremost, it's important to draw this distinction between Ecora as a royalty and streaming business and a mining operator or project developer. Ecora, of course, is a royalty and streaming business, and thus our business model, by virtue of our royalty and streaming interests, is to be entitled to a percentage of revenue and the value of critical minerals or the minerals extracted and sold at the time by our operator partners. We have a diversified portfolio of critical minerals with the core of our portfolio being in copper. And that's also diversified across well-established mining jurisdictions, strong operating partner management teams, and stage of development, with the core of our portfolio being in producing assets, just over 50% of our estimated NAV being in royalties that are already in production, and balance being assets that are near first production, and the tail towards assets that are longer dated, but in time still quite very exciting.
Just to sum up, Marc, is it fair to say that despite the economic uncertainty being experienced as a result of various geopolitical situations, you remain bullish about your prospects for 2026?
Yeah, you're correct. I mean, look, there's no doubt there's the level of uncertainty from where we sit today, but from where things stand, I think the outlook for Ecora this year and beyond remains very, very exciting. We've spoken about Ecora's very layered growth profile, so I won't repeat that, but we're excited to see that materialize, and with potential for a number of key milestones and de-risking events in that regard over the year. Number two, we expect to continue to reduce debt. We delivered on that very strongly over the course of last year following the acquisition of the Mimbula stream, and absent another acquisition, we expect to see further debt reduction. And then last, we of course continue to evaluate further royalty and stream acquisitions and we do feel that in time we're looking forward to continuing to grow and diversify the portfolio.
Well, Marc, I hope you'll continue to keep us updated with your progress. Thank you very much for your time today.
Thank you.
Marc Bishop Lafleche, the CEO of Ecora Royalties.